Hello, everyone, and welcome back. Today, we're going to talk about the reasons why financial analysts are becoming more optimistic about Tesla's price. There's a lot to talk about, including big steps forward in energy storage, progress in self driving technology, and hints at new, cheaper car models. We'll look at what experts say will happen, including an interesting price target raised from analyst Garrett Nelson, and see how these changes will affect Tesla's marketplace and future prospects. Whether you're an experienced investor, a tech fan, or just someone who wants to know why Tesla keeps making news, this show will give you a lot of information about what's affecting the price of Tesla stock. Don't forget to sign up for Tesla stock news to get daily updates and in-depth analysis on everything Tesla. Let's get right to the study. A lot of people were interested in the car delivery numbers that came out yesterday, but the energy storage side was the real story. Tesla said that 9,400 megawatt hours of energy storage were used in the second quarter, which is more than twice as much as the previous record set in Q1. The company has talked about this growth for a long time, and now the numbers are finally starting to show it. That's probably a big reason why the stock moved so strongly yesterday and is still going up in pre-market trade. Tesla has changed the story to focus on long-term market possibilities in AI, robotics, energy storage, and self-driving cars. This is a big reason why the stock has been going up lately. The Robo-Taxi Day on August 8 is now the most important event. Even more important than the earnings report on July 23, the next big thing could happen when Elon Musk shows off the low-cost EV that he has been talking about for years. We think Tesla is ahead of the curve and that they could start making cars as early as the end of 2019. More and more people are excited about Tesla stock, and some of the most respected analysts have changed their minds about it. Let's look at three important people's points of view. George Gianarikas of Canaccord Genuity, Dan Ives of Wedbush Securities, and Keith Fitzgerald of Money Map Press. Gianarikas thinks Tesla may have hit its lowest point and expects the company to grow thanks to new cars coming out soon. Additionally, both Ives and Fitzgerald have pointed out that Tesla is a major player in the AI industry that is greatly undervalued. We also have YouTube expert Brian White, who talks about how excited he is about these changes. As we've seen, analysts often change their price goals in response to changes in the market. This creates a cycle of changes that are based on past events rather than predictions for the future. So what is keeping Tesla's stock going in a good direction? Analysts like Gianarikas point to the company's steady growth in earnings and sales from one year to the next, which seems to have stopped in Q1. There is a positive view for the stock's future as new vehicles are about to come out. Tim Higgins, who writes a business piece for the Wall Street Journal and appears on CNBC, gives this conversation more depth. He says that the number of deliveries has gone up, but he also talks about the problems that could come from Chinese producers. This interaction between supply and demand is very important for how Tesla's stock will move in the future. Even though electric vehicles, EVs, are still changing, Tesla is at a key point in this process. The company has stayed strong, but it is now facing more and more competition, especially from Chinese companies like BYD. In its home market, BYD profits from strict EV rules, but Tesla's growth in the US is still slow, with EV adoption staying between 4% and 5%. Even though growth is slower, Tesla is projected to make a lot more money because it doesn't have to deal with the low margins that BYD shareholders have agreed to in exchange for fast growth. Tesla's plan seems to be changing. The planned building of new plants and the release of new models have been pushed back. This isn't because of a lack of money, but possibly because of a change in strategy. This shows a focus on staying relevant over the long term rather than growing right away. At the same time, competition is getting tougher across all market segments. At the high end, new companies like Lucid are competing with Tesla. At the low end, Chinese names are appealing to people who want to save money. Tesla is now in a tough spot because it has to balance the draw of its high-end brand with the need to compete with cheaper options. A lot of people are still interested in Tesla's possibilities in the market for self-driving taxis. Analyst George Gianarikas is going to talk about how important Tesla's full self-driving FSD feature is, especially since the price has been lowered and promotional trials have been going on. How quickly this technology is adopted could be a key sign of how well Tesla does in the short and long run in the field of self-driving cars. When we talk about Tesla's future, especially when it comes to self-driving cars, we come to the important role that FSD technology plays. People who aren't sure about the idea of a robo-taxi need to take FSD as a crucial next step that helps them gradually accept the bigger possibilities of autonomy. Tesla has an edge in developing this technology because it has a huge amount of training data that it gathers from its fleet's many sensor networks. But building a strong base for self-driving cars isn't easy. For example, adding the sensors and cameras that cars need is very expensive and hard to do when compared to companies like Ford, whose sensor technologies are mostly focused on features like parking help. This investment shows how big Tesla's plans are. Another important topic has been how institutions have invested in Tesla. The late addition of Tesla to the S&P 500 and earlier credit rating problems probably made earlier investments from funds limited by their directives less likely to succeed. Now that Tesla's stock seems to have reached a new low point, institutional investors are reevaluating their positions. They expect small but steady gains that could be higher than inflation. Recently, analysts like Dan Ives of Wedbush raised their price targets for Tesla, citing the company's strategy for balancing prices and the chance for big volume growth, especially in China. In Ives' optimistic view, Tesla's price goal goes all the way up to $400. With good numbers coming from the Gigafactory in Shanghai, Tesla looks like it will be able to keep its lead in the electric vehicle market. Garrett Nelson from CFRI also raised his price target for Tesla. He did this because Tesla's energy storage section grew so quickly last quarter. It more than doubled. Even though it only makes up a small part of total revenue, this segment has a lot of promise. In the future, Robotaxi Day on August 8th could change how the market sees Tesla even more, pointing it toward long-term possibilities in AI, robotics, and energy storage. Tesla is also likely to show off a mass-market EV that costs between $30,000 and $35,000. This will make it even more competitive. As we come to the end of our talk about Tesla's changing strategies and market success, we've seen how their technology, especially in energy storage and self-driving cars, makes them stand out in the industry. Many experts see a bright future for Tesla and are raising their price targets for the stock. This is making people more and more excited about the company. What do you think about Tesla's method to coming up with new ideas and growing its business? Do you think their focus on self-driving cars and storing energy will pay off? What do you think will happen to Tesla's market share and stock value if a cheaper mass-market EV is released? If you learned something from today's talk, please like this video and subscribe to Tesla Stock News to get more news and in-depth analysis. Thanks for watching, and stay tuned for more.